Thank you. Ladies and gentlemen, it's a real pleasure to be here today, and I would like to start with once again expressing gratitude to our co-hosts, the IFAD, with whom we have been working on the remittance issues for quite a while, and of course the very hospitable co-hosts, Bank Negara Malaysia, who are here today, and we're continuing this very important conference in spite of the fact that there are very important political developments and elections which took place yesterday, but I guess it's a very important symbol of mature democracy that this kind of event allows us nevertheless to continue to focus on the issues which are quite important for economic development. And so with this, I would like to say that, as Sako mentioned today, this day is devoted to the discussions on promoting conducive and enabling remittance markets, the role of regulation and supervision in these areas. And I'm very happy to have today on the panel the distinguished panelists who actually represent in a very interesting way the regulators, because we have here the representatives of the Central Bank of Philippines and also European Banking Authority, as well as the representative of Financial Integrity Unit of South Korea, and then the representative of the industry, who is the head of association, Mr. Mohit Davar, the head of Association of Money Transfer Networks. So I think we have a kind of possibility to compare the views and to talk about how policies can support market development in a very strategic way. Specifically, with distinguished panelists, we will discuss how standard-setting bodies and regulators should create and continuously ensure a conducive and enabling environment that could further support developments in the remittance market in a safe manner with integrity. I think that the task of regulators is quite challenging because they need to balance the objectives of stability, integrity, while at the same time take care of financial inclusion, consumer protection, and making sure that innovation is not stalled. And I think we have discussed quite a bit in the last couple of days the advances of technology and innovation in this area. So I think one of the challenges is how to make sure that regulators and supervisors are keeping abreast of developments, because very often we're playing a little bit of catching up game. And on one hand, it's probably a good thing that the industry leads, but on the other hand, we need to make sure that there are adequate responses on the part of regulators which continue to encourage these developments while at the same time ensuring stability and consumer protection. So we heard this morning about Malaysia's journey of transforming money services business sector, Malaysia's legal reforms that aimed at creating conducive environment while protecting the integrity of the financial market. We also know that international standard setters, especially FATF, increasingly engage with the private sector. For example, in April, FATF held its annual private sector consultative forum in Vienna, where they discussed combating de-risking. They discussed the issues of fintech and regtech, digital identification, and crypto assets. So I think that we will start this discussion with asking our panelists to make some introductory remarks. And I think that first I would like to invite the representative of the Central Bank of Philippines, Dindo Santos, to talk about the measures which Bank of Philippines has taken, maybe in recent times, to try to address the issues of remittances and creating conducive environment.
Thank you, Irina. Just a quick thank you, Bank Negara Malaysia, IFAD, and World Bank Group for inviting us in this global forum. So for the Philippines perspective and BSP's response to digital innovation, so right now, the BSP has established a regulatory framework that fosters innovation while ensuring that risks are effectively managed. We continuously monitor financial technology development, including the development in the remittance market. So right now, the BSP approach is a balanced regulatory framework. It's a balanced regulatory framework anchored on three principles, namely risk-based and proportionate regulation, active multi-stakeholder collaboration, and consumer protection. Okay? So these principles are pragmatically implemented through the BSPs. BSP referred to it's Bangko Sentral ng Pilipinas, it's the Filipino language or the Central Bank of the Philippines. So we implemented it to the BSP's flexible test and learn approach to financial innovation. So in the past 2 days, we're talking about and conversing and referring it to the regulatory sandbox. So this provides the innovators to be market players in their own right and to participate in the financial system as they introduce their products and also as partner of the traditional market players like banks and other financial institutions. So this approach has been useful based on our experience, the Philippine experience. This has been useful since it allowed the BSP to balance innovation as well as the safety nets, but while also ensuring the economic benefits for the general public. Last year, February 2017, the BSP issued a circular that established a regulatory framework for virtual currency-based payments and remittance transactions. So under this BC approach, the virtual currency exchanges are classified under remittance transfer companies. So as a remittance transfer companies, they need to comply with our basic requirements for RTC. This will ensure a level playing field for all those type of entities that are doing similar type of businesses. Right now, we have issued a certificate of registration for 2 virtual currency exchanges, and we received about 35 applications for virtual currency exchanges. So as I mentioned, we applied risk-based and proportionate regulation. For money service businesses, we focus on anti-money laundering rules and regulations. So we do this, for example, the MSBs in the Philippines, which about right now number about 5,400 entities. These are classified from type A, which are large-scale operators, up to type C, which are the small-scale operators. So depending on the nature and extent of activities, the capitalization requirements and reporting obligation will be lesser or reduced if the activities are simpler or less complex. So also, in terms of AML, we already apply risk-based KYC. So for those with a simpler operation, so we reduce the KYC requirements. And also we apply the use of technology for as a substitute for face-to-face contact. So right now, we allow the BSP supervised financial institution, as long as they have verified the documents, to conduct face-to-face contact using, for example, social platforms such as Skype and other social media platforms. Aside from the money transfer value chain, wherein we identify gaps and areas for improvement, we also look at beyond that. So this year, since based on our data, most of the usage and utility of the remittance, because largely Philippine remittance markets is inbound, about 80% are being used for consumption, only about 20% are for savings, and 10% are for investment. Early this year, we established a basic deposit framework. Based on the data provided by World Bank Group in 2015, only about 31% of the adult Filipinos serve formal accounts in banks. So they cited barriers such as cost, less documentary requirements, and also lack of facility. So with our basic deposit framework, right now, it will allow, because most of the recipients of the remittance in the Philippines are the rural people, those located outside the cities. So through the basic deposit accounts, this will allow